Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Bob Scarborough.
And we are the FAIRtax Guys.
Guys.
You didn't know I was a magician, did you? I could make a Rubik's Cube disappear. Watch this.
Wow, that's just like the Internal Revenue Service with the FAIRtax.
I wish that was the Internal Revenue Service with the FAIRtax. We could get rid of them like that. Well, how you been?
I've been great, man. It's springtime all around, and boy, Sunday was a change. And we had the date of this recording the night before. There were tornado warnings around, and I don't remember if there were any sightings, but the radar always triggers at the National Weather Service the the warnings. And we had one at the house, near the house, last night. I got up at like about 11:45 p.m. and I said, well, I'll go sit out on the porch and wait for it if it's going to come, because I don't want to be asleep and have it tearing the house apart. So I went out on the porch, and then, hey, honey, it's time to wake up and crawl underneath the bed. But it never came. But the wind was pretty significant. And it was.
They actually had a tornado here in Ocala about a week ago, but way over on the other side of town from where I am. So that's how that is.
It's that time of year. So we have a beautiful weekend coming up in the Piedmont of Triad of North Carolina, where we live and work, and we're in the middle of tax season.
Oh, mercy!
3 weeks or so, 3 or 4 weeks now.
Oh yeah, we got to do something special for our episode that's closest to the tax filing deadline. We'll have to come up with something like that. But for now, it is now time to go digging in and seeing what the Congress critters are trying to do to the tax code. So when you fill out your return next year, you'll know what you got to do. Okay.
That's right.
All right. Well, again, what we do real quickly here, we go to Congress.gov, and up in the search bar, right at the very top of the page, you type in the words Internal Revenue Code and close that in quotes. So you're looking at the whole string, and hit the go button, looking just at legislation in the current Congress. Those are selections you can make over on the left side of the page. And if you do that, as of the day we are recording this, 1,573 hits on that search, including HR 7183. This is the Rust to Revitalization Act of 2022. And it
Rust revitalization. I spray that stuff under my car, to keep when the water gets under it.
Yeah, that would work. Now, this one actually had some text in it. We look at these things, in chronological order, as the newest to oldest. So one's most recently introduced, and sometimes they don't have text in them. Yes, but this one does. This was HR 7183 to amend the Internal Revenue Code to provide a special rule for designating former industrial tracts contiguous to designated opportunity zones, and your favorite phrase, for other purposes.
There you go. Well, I've heard the Rust Belt mentioned a number of times for revitalization, and possibly being used as, some of the areas of manufacturing for new electric vehicles and batteries and things like that. The Rust Belt, bringing the Rust Belt back to its grandeur from many, many generations ago.
But a little bit of detail here. If you dig into the text, it says the section 1400Z 1B of the Internal Revenue Code is amended by adding the following paragraph, and then it puts in the new stuff that they're going to work on.
What was that number again? 1,000.
It is section 1,400, 1400Z, as in Zulu, -1B, is amended by adding another section behind that. So there we go.
That's great.
Pay attention.
Anything else they might want to add in there later. Maybe they're just putting this in there so they can get those words in that say, and whatever else we might think of later.
Yeah, I'm saying now, pay attention. There'll be a quiz later, okay?
Yeah, I got it written down. I've got the first one written down.
Well, then write this one down. HR 7166. 7166. This is the Make Medicine in America Again Act. And this one also has some text in it that says, as soon as my computer pops it up, there it is, to amend the Internal Revenue Code to provide for extended expensing of pharmaceutical manufacturing property and for other purposes. And In other words, they just kind of want to provide some more tax incentives for pharmaceutical manufacturers to do their thing here in the United States rather than overseas. I've got a better way to do that. It's called get rid of the income tax and pass the fair tax.
Yeah. For those of you just joining us, we're going through Congress.gov, which is the other Bob's favorite section of the program, and it is fast becoming mine because the absolute absurdity of some of the things that are in there, you have to scratch your head and say, why are we using the tax code to bring all of this about? What is the purpose? Mm-hmm. And of course, having the tax code there makes it easy for legislators to do just exactly what we're reading and on a weekly basis sometimes here on the show.
All right, well, dig this one. HR 7146, Enhancing Emergency and Retirement Savings Act of 2022. Okay, and that one says to amend the Internal Revenue Code to provide for penalty-free withdrawals from retirement accounts for certain emergency expenses and for other purposes. And you read on down into the text a little bit and you find, oh, well, your emergency distribution is limited to just $1,000 and you can get one per year. Now, that's going to be a really big help if you've got an expense, the magnitude of which rises to the level of being a real emergency. But
you better hope that it fits into one of the pre-approved categories that they're going to allow it to be credited in anyway.
Yeah, but doesn't it just gall your gizzard when the IRS is telling you what you can do and how much of your own money you can have? Again, if we had the fair tax and we didn't have all this garbage, every account that you had, every savings account would be loaded with pre-tax dollars. And then you can take out as much as you want, anytime you want, for any reason you want. And it's none of the government's daggone business. And that's the way it would be if we had the fair tax.
Absolutely. And I had a question pop in my head the other day as a result of a conversation earlier. Usually that's what happens. I have a conversation and then 6 hours later, a comment or a realization comes into my head. You know, with the fair tax, there's no tax on savings. You have 401ks and things like that. And that's a question I want to ask Jade Wally about that transitional year where the fair tax goes into effect and you have a certain amount of tax exempt savings, but you have an open door for access to Social Security. You don't get money taken out of your Social Security payments for taxes. And the list goes on, but you're encouraged. It's a savings encouraging mechanism. The fair tax is.
Okay, I got one more. This is HR 7143 to provide for energy rebates to individual taxpayers and for other purposes. Again, it says that they're going to try to give, because the cost of energy has gone up so bad, they're going to try to give $100 a month, $200 in the case of a joint return, as a tax credit against your taxes when on your next year. That's HR 7143. And it's just insane that they want to do that. It all says that you're, there's another one in here that says we're not going to import any more Russian oil.
Well, yeah,
but that's it. Energy, they create all these problems and then they try to use the tax code to solve the problems that they fixed. Provide for energy rebates to individual taxpayers. Again, if we had the fair tax, people were bringing home their entire paychecks, plus they were getting their tax refund, the prebate every month. You wouldn't need to be doing this because folks would have a whole lot more money in their pocket to deal with.
That's right. You'd be a fat cat.
Yeah, you would.
You'd be walking around on Easy Street and a lot of, and the biggest impact that we're seeing right now due to inflation is on lower income right now. Folks that are paycheck to paycheck workers, they're getting hit right now. Grocery store items, food cost going up. Some things you can't find. The war in the Ukraine is causing some of the wheat futures to skyrocket. Cost of bread and those types of items that come from the Ukraine and even Russia too. If you can imagine that in the next several months, if the growing season is missed, the planting season, for wheat in Ukraine, just as an example. What that's going to mean 6 months from now or 7 months from now around the world to wherever they're supplying, especially there in the Middle East.
Yeah, I found that when I was thinking of HR 7155, the Homefront Energy Independence Act, to prohibit the importation of petroleum and petroleum products from the Russian Federation, and to amend the Internal Revenue Code to establish an income tax credit for the sale or blending of certain fuels containing ethanol, and to extend tax incentives for biodiesel and renewable diesel. Again, the best way to get home energy independence is to pass the fair tax.
Right. Well, one thing we were talking about, and I heard you and Ron, God rest his soul, talking about this months ago, that if you got into a situation where the economy was having some hiccups or experiencing some challenges, you could actually throttle back some of the tax, the consumption tax, on a temporary basis to put more money at that point in the consumer's hands.
Yeah, you could just temporarily increase the prebate.
Right, or increase the prebate. Sure, you could do it that way. I just think that in terms of independence, privacy, incentive for savings, privacy, I know I mentioned that twice and I meant to, because think about all of the information that's available at the Internal Revenue Service. The U.S. Treasury has a lot of data. And right now, due to the war between Russia and the Ukraine, and we just heard on the news at the time of this recording that there's some saber rattling going on about cyber attacks and things like that. And can you imagine what that's going to be like if that happens at the crossroads with our tax return deadline of April 15th? I mean, it's insane to have all of that information in one place. And that's kind of what we have with the U.S. Treasury, with the Internal Revenue Service. Our name, address, phone number, history, where you lived 2 years ago, how much you made 8 years ago. It's insane.
What strikes me, all of the things that they're trying to do with these legislative proposals we just looked at could be accomplished better, faster, and more efficiently with a fair tax. We got to move on here because we're rapidly running out of time. And this has kind of gotten away from me for the past couple of weeks, and I should have been mentioning it, and I'm just getting around to doing it this time. The fair tax has a couple of new co-sponsors.
Yes.
Representative Andy Biggs from Arizona signed on February the 9th. And the latest co-sponsor is Representative Ralph Norman from South Carolina, District 5. He signed on a little over a month ago on February 25th. And that just kind of flew under the radar while we were getting ready with all our CPAC stuff and all.
That's right.
We certainly want to make sure that everybody gets the recognition they deserve for co-sponsoring the fair tax. And while we're talking about people co-sponsoring the fair tax, let me encourage folks to go back into the Grassroots Corner archive, because Jim Bennett has written a series, or actually Jim has presented a series of articles that were actually written by John Gaver on how to get candidates to sign the fair tax pledge. And
it's a blueprint. It's a blueprint for doing it. And it makes it easy.
I found this on the web for S of articles that were actually written by John Gaver on how to get candidates to sign the fair tax.
Oh, there you go. Hey, we almost had a
Siri heard me talking about John Gaver and the fair tax pledge, and I had my everything silenced, but apparently Siri overrides the silencing.
So when that woman wants to talk, there's no stopping her.
Get that. Could you try again?
All right.
If you're just joining us, the other Bob is talking with Siri about John Gaver. And what John Gaver has done is he's figured out a way in Texas 2 and 8, District 2 and District 8, to get a lot of the candidates down there all set up and signing the fair tax pledge. So you go to fairtax.org and go to the information page that talks about Grassroots Corner. And on there, you're going to find out how John Gaver is doing what he's doing. And there's how many? 4? There was like 4 different segments, correct?
He wrote 4 different segments, and Jim wrote a 5th one kind of introducing it. So you can go that. And I believe that those, I know because I put them up there, those episodes are also on Spreaker. If you want to
Yeah.
look that up as a podcast. But
So you
say
go to fairtax.org and then go to the tab that says news. And under the tab that says news is Grassroots Corner. Jim Bennett puts out a report every week. And I mean, this particular series with John Gaver's information, how to get the candidates to sign the pledge, is worth it to spend some time there.
Absolutely.
And if folks are wondering how they can help, that is probably the biggest thing that we can do ahead of the not only the primaries, but the general election, in getting as many people to sign the pledge, candidates, and let them go out and politic and talk about the fair tax all between now and the end of the year in November. And we boil it down in the next few months to 2 people opposing each other in November. And we'll be excited when we have people entering into Congress next year that have signed a fair tax pledge. And then we'll be like, okay, we're going to hold you to it.
Yeah, well, I remember I've heard from several people, Mo Brooks and Marissa Selvig being 2 of them, say trying to change minds is just not going to work. You have to elect people that are thinking right to begin with when they get in there.
Correct.
So Mo and Marissa have gotten that right on the nose. But our time's getting away from us. We got about 11 and a half minutes left, and we want to get into this article that you found the other day, which is pretty cool, about how the IRS makes your life more complicated. New life expectancy tables could change the amount of required withdrawals from retirement plans. So not only is the government going to tell you what you can take out of your retirement plan and how much you can put into it and stuff like that, i.e. what you can do with your own money, they're going to change the rules again based on the life expectancy tables. Get into that.
Okay, well, you know that the RMDs were waived for 2020 because of the COVID-19 pandemic. They returned in 2021, which means now is what we're working on right now.
Okay, again, RMD, if you're not familiar with it, required minimum distribution, that is money you have to take out once you reach a certain age, because all that money is sitting in there and it hasn't been taxed yet. And Uncle Sam wants his chunk of it. So he's going to make you take it out. That's what that RMD is all about.
They changed the rules on that with regard to an individual who is a survivor of someone who had an IRA, and they are required within 10 years to evacuate the IRA. But here we go. There's a fellow named Ed Slott, according to this article that we've pulled here. He's a CPA and a founder of Ed Slott and Company. He says there are a couple of tricky situations that will only happen this year. As it notes on the IRS website, most seniors had to start taking withdrawals from their the SEP IRA, the simple IRA, the IRA or retirement account when they reached age 70 and a half. However, because of changes made by the Secure Act of 2019, if your birthday was July 1st, 2019 or later, you don't have to take withdrawals until you reach 72. Withdrawals from Roth IRAs aren't required until after the death of the owner. So that's what makes the Roth a more attractive IRA to have. And of course, we always advise you to check with your tax preparer, financial advisor, when you are making decisions. And we're just a couple of guys that like the fair tax. So if you reach age 70 and a half before 2020, the required minimum distributions kicked in at that point. But if you turned or will turn 2020 or later, the mandatory withdrawals aren't required until you reach age 72. And this is where I stop and fog over, because I'm saying, okay, well, I'm not quite there yet, but I'm going to be there. I might have to worry about this at some point in time, but why? And this goes back to your reports from Congress.gov about why. Why should we even have to worry about this with the IRS on the trash heap of history, as you have so eloquently put it in the past? We get an opportunity to invest our money the way we want to. We get to keep it under the mattress if we want to. We get to put it in any kind of an investment vehicle that we feel is worthwhile, and let it help make some money. Imagine what all of this would do for the economy beyond just encouraging saving, and we've talked about that before too. But the IRS just sits there and like you said a minute ago, waits for a person to get to 70 and a half. And then they're like, all right, let's go.
Yeah, because when you take your money out of your retirement account, that becomes taxable income to you. Right. Because you haven't paid taxes on it yet. So they make you take it. They make you increase your taxable income so they can get their chunk of it. And
it's insane. And it happens when your mom or dad died, and you got you and your sister got a split of a retirement account. And you get the message at the end of every year, you got to make that distribution. You got to take a certain amount. And then you have to take all of it out. You have to vacuum the account out and close it at the end of year 10. It's insane. But yes, the Internal Revenue Service is just sitting there going, hey,
you've got to do that so you can have more taxable income. The IRS can get their hands on more of it, which kind of leads into another article that you found too. Do I need to file a tax return if most of my income is Social Security?
Yeah, that was, you may want to file for other reasons, but according to the article in Market Watch that came out, it's about a day or two before we recorded, you probably don't have to. So the letter said just that. The short answer, probably not. Of course, there are always mitigating circumstances. According to the article, it pays to look more closely to qualify the answer. As long as the only income that the individual receives is from Social Security, there is no tax withheld from those payments. Most likely, filing a tax return is not necessary, but there may be other matters at work that might require a person to file a tax return anyhow. And it says if you haven't had, this is the article from Market Watch, if you haven't had any tax withheld either from the Social Security payments or from any other source, might be a rent or, you might have had a part-time job, including quarterly estimated tax payments or carried over refunds from prior years, you should file a tax return. In many cases, you'll get most, if not all, of the withheld tax back in a refund. And
I got a better idea.
Here's where the other Bob says, a prebate.
Yeah, let's get rid of the income tax entirely. You can keep all of your money up front. You don't have to make an interest-free loan to the government and then jump up and down because you get your change back in the IRS refund. And of course, the prebate, you get it every month, not once a year.
Oh my goodness. And so again, Market Watch's article says, do you need to file a tax return if most of your income is Social Security? Probably not, being the short answer, but you may want to file one for other reasons. So again, you want to talk to your financial advisor, your CPA, whoever does your taxes, and let them know. Thanks to Jim Blankenship, who penned that article in Market Watch a few days ago, Understanding Social Security. Now, Social Security continues to be funded, not through the Social Security tax on income, but through the voluminous increase in revenue to the Treasury due to the consumption tax enabled and enacted through the FAIRtax.
Yes. Do you ever have to file a tax return under the FAIRtax? No, not for any reason at all. And again, Social Security is currently funded with a payroll tax, which goes away under the FAIRtax. And then it's in the FAIRtax bill. The percentage,
the worst thing for young working people.
That's the most regressive tax on the book. There's no standard deduction. You hit everybody at the same rate, and you do it from $1. And that goes away with the FAIRtax, and that is funded out of this general FAIRtax revenue that comes in here. We have got about 4 minutes left, and we have not talked about the marketplace in a while. Yes. Now, but my question to you again is, when are your Moravian bakery friends going to show up out there so I can buy some more sugar cake and spice cookies?
I need to bring you some next time I come down. Actually, I need to go and buy you some, because I know that that's going to be an important component. And they're working on their own method through the internet to do this. And so, but they would be looking at all opportunities. And that's what we'll say to all business owners that are out there. You may have a service, you go to Facebook or you go to the social media and you see people out there that are, wow, look at this beautiful battery that I have here. It's $10. How would you like to buy it? If you have something like that going on in your, like a side job, or as I've heard people say, the side hustle, you can go and enable a store on FAIRtaxMarketplace.com and set up a shop online, and then invite your friends to be a part of that. And you'll not only have access to a really great platform, but in that platform, you'll have access to all of the folks who are supporters of the FAIRtax, who are available and ready to buy once the marketplace is populated. So if you think what it looks like on the social media with the marketplace, that is what we envision for the FAIRtax Marketplace through the website, FAIRtaxMarketplace.com. You can go on there. You can create your account today. You can find out more about it. You can ask questions. They have categories available on there. You can suggest a category if it's something that you're interested in seeing that you don't see on there, but you'd like to find a way to regularly support the FAIRtax beyond the 1040 Club. Well, there's an opportunity for you to do that through the FAIRtax. And I thought about it for not too long ago, Bob. I said, this is just like an Amazon type account, something that's out there. And we're at the ground floor. So we have to figure out how to get product and services in there. It could be something that's a national service or product, but it could also be something that's local, that's purely in your region that folks could help support and help support the FAIRtax at the same time.
Yeah, you're buying things you'd normally buy anyway. And
Right.
it provides a revenue stream to the Americans for Fair Taxation organization, with which they can do a lot more than they're able to do now. And the stronger that organization is, the more pressure we can put on the Congress critters to pass the fair tax and get rid of the income tax and get rid of the Internal Revenue Service. And this is one of my favorite times of year, when it's almost time for the tax filing deadline. This is when people are really receptive to the fair tax message after they've been sitting for hours and hours with boxes of receipts, or they spent hundreds of dollars, with their CPA trying to get their taxes done.
They're getting ready to bring the pen out and write that check if they have to. Or they're waiting to buy that big 75,000-inch color television set from the refund.
Oh, yeah. Well, I tell you, you can get a refund every month with the FAIRtax.
Right.
Any way you slice it, the FAIRtax is much, much better than the income tax. And so, again, we would encourage folks to go out, register on the marketplace, tell the team there what kind of products and services you'd like to see. They will try to connect up with vendors who can supply those products and services to you. Then you could buy things that you'd normally buy anyway and support the FAIRtax in the process. And that's going to wrap up this edition of FAIRtax Power Radio. We are again slap out of time. Thank you so much for watching and listening. I'm Bob Paxton.
And I'm Bob Scarborough.
We are the FAIRtax Guys, reminding you again that the FAIRtax is the only truly fair tax. And once you understand it,
you will demand it.
So what do you need from me to get these taxes collected?
Glad you asked, because there is a fair amount of information you need to be aware of.
That's your tax plan?
Oh, no, this is just the revisions for this year's tax plan. What I need from you is you need to keep track of all of your income, as well as any taxes that you've already paid. Also, any gifts that you received or gifts you've given to churches or charities or individuals throughout the entire year. Do you do any side jobs?
Every now and again.
Great, because there's some more information about that right here. Everything you need to know right here. So just simply compile that, send it in to us. Be careful, make sure there's no mistakes. If we do find mistakes, or maybe we can fine you or, throw you in jail. So you might want to be aware of that.
And what do you need from me?
As an individual, nothing. As a business owner, or if you're doing side jobs, yes, you would have to collect taxes on that, but